My name is Mohammed Zakwan Mohammed. I'm a bookkeeping teacher at Form 3 class. Topic today is adjustment. At the end of this lesson, the student should be able to explain the reason for adjusting entry. Second, to identify 4 basic adjusting entry. Third, to identify the structure of adjusting entry. And fourth, post-transaction of adjusting entry. Welcome on our bookkeeping session. So it is better today to continue with adjusting entry. Why an accountant adjusts the accounts of the business at the end of the accounting period. The accountant adjusts the accounting of the business at the end of each accounting period in order to get the correct information for that period. Okay, let us look the basic adjusting entry. There are 4 basic adjusting entry. One, accrued or arrear or outstanding expenses. These are expenses which the firm has used but have not yet been paid for by the end of the accounting period. Second, prepaid or unexpired or advanced expenses. These are expenses to be used in the following accounting period, but have been paid in advance in the current accounting period. Now we continue with the structure of accrued and prepaid expenses account. My dear student and viewer, I think you remember about accrued and prepaid expenses. What is accrued and prepaid expenses? Good. Accrued expenses is a type of expenses whereby consumer use the service without paying. And the prepaid expenses is a type of expenses whereby consumer pay in advance. How can be shown through the account? First of all, draw the account of expenses account. Expenses account. Expenses account. Put here debit and here credit. Okay. Refer to the example number 1. The expenses paid during the year 2018 Tanzania shillings X, owing as at 31st December 2017 Tanzania shillings X, owing at 31st December 2018 Tanzania shillings X, prepaid as at 31st December 2017 Tanzania shillings X, prepaid is at 31st December 2018 Tanzania shillings X. Require post the above transaction to the ledger accounts and the balance transfer to the financial statement. Okay, the expenses paid during the year. This it means that cash amount paid for the service used by the customer. Record on a debit side by saying that cash shillings X. Owing as at 31st December 2017. This is a previous owing. The previous owing should be recorded at the credit side of expenses account. You put here, you say that owing BD. And owing is at 31st December 2018 Tanzania shillings X. This is a current owing. The current owing should be added by cash. You put here on a debit side and said that owing CD. Then prepaid is at 31st December 2017. This is a prepaid for previous year. In now become a current year payment. Should be recorded on a debit side of the expenses account. Said that prepaid BD amount shillings X. Then prepaid is at 31st December 2018. This is a current prepaid. Current prepaid should be recorded at a credit side of expenses account. Record here that prepaid CD. After that, add all debit side amount. You got XX. Always for expenses account, debit side will be greater than the credit side. You take a debit side amount less than the credit side amount. You got the amount transferred to P and L. You put here. And then close the account. Then you open profit and loss account. Profit and loss account. You receive from expenses account. You put on a debit side. Say that expenses is here. How much? Shillings X. Have you understood it? Okay. After that, in the next year, the prepaid CD become in a debit side and say that prepaid BD. This is a next year. For the next year, the prepaid CD become a prepaid BD. You put on a debit side. And owing CD become a owing BD. You put here owing BD amount X. This is for next year. Next year. Next year. Okay. This is a structure of expenses account. how can we post the transaction through accrued and prepaid. Third, accrued or arrear or expired or used income. This is the income which the firm anticipates getting, but which has not yet been received during the accounting period. For example, rent receivable or data. Fourth, prepaid or unused or unexpired income. This is an income which has already been received in the current accounting period but relates to the following accounting period. Okay, we continue with the accrued and the prepaid revenue. First of all, should we draw the account known as a revenue account. Put here credit side and here debit side. Example number 2. During the year ended 31st December 2018, rent receivable were Tanzania shillings X. On 31st December 2017, rent receivable owings were Tanzania shillings X. And Tanzania shilling X still owing on 31st December 2018, and on 31st December 2017, prepaid rent receivable were Tanzania shillings X, and the prepaid rent receivable is at 31st December 2018 Tanzania shillings X. How may we record it? Remember that all revenue should have a credit balance, and when you receive a revenue, should be recording at a credit side. Here you put here cash received shillings X. It means what? The amount received during the year ended. For the rent receivable were Tanzania shillings X. On 31st December 2017, rent receivable owing. This is owings for previous year. All owings for previous year become a debit side of rent receivable. Record here owing BD. Then, and the Tanzania shillings X is still owing on 31st December 2018. This is a current year's owing. All current year owing should be added to the cash. You put on a credit side. You said that owing CD. It means current year's owing. Okay. Then on 31st December 2017, prepaid rent receivable were Tanzania shillings X. This is a previous prepaid. In the current year, become a current payment. You put on a credit side like a cash receive. You said that prepaid BD. Okay. Then and the prepaid rent receivable is at 31st December 2018 is Tanzania shillings X. This is a current prepaid. From the current prepaid have already recorded in a cash received. You put on a debit side. You you say that prepaid CD, it means current year prepaid. Then you add all amount of credit, you got X, and debit side X, you got X. Then after add the amount of credit side, you less the amount of debit side. Always for revenue, credit side will be bigger than to debit side. The difference you put on a debit side, you say P and L. Have you understood it? Then the owing CD will become on debit side in the next year. Next year, owing CD become owing BD. And the prepaid CD in the next year become prepaid BD. You put on credit side. Then you have already discussed that the difference between credit side and debit side should be transferred to P and L. Should be draw P and L. From this is a revenue must be recorded on a credit side by saying that revenue account amount X. This is a structure of accrued and prepaid revenue. Okay. Now we post the transaction on accrued and prepaid expenses and accrued and prepaid revenue. I think we have already discussed the structure of accrued and prepaid expenses and accrued and prepaid revenue. Before to read the example, first of all, should draw the account. The account is known as a stationary account. Stationary account. You put here debit, credit, and here debit. Then draw a line to bisect it two sides. Okay. Stationary paid during a year 2019 Tanzania shillings 370. And owing as at 31st December 2018 is Tanzania shillings 110. And owing as at 31st December 2019 is 245. Post the above transactions to stationary account and balance transfer to financial statement. I think we know that stationary is expenses, and all expenses should have a debit balance. But the payment made to these expenses during a year 2019 Tanzania shillings 370 in terms of cash. Refer to the debit side is here. Write a cash shillings 370. This is the amount received during a year 2019. Owing as at 31st December 2018 Tanzania shillings 110. Remember that this is a previous owing, and all previous owing through the expenses account should be recorded on a credit side. You put here that owing BD, how much? 110. And then after putting here, we come to the question. Owing is at 31st December 2019 is Tanzania shillings 245. This is a current owing. I think you remember that all current owing should be recorded on a debit side and added by cash. This is a owing CD is 245. Okay, add the amount of, or add all amount of debit. You got 5, you got 11, 1, carry 1, 4, 6, 615 minus 110. You got 5, you got 0, you got 5. This amount, you say that P and L. And the owing CD should be transferred on credit side for the next year. It means 2020 is known as owing BD 245. And the amount, the difference between debit side and credit side, 505, should be transferred to P and L. Record here stationery 505. Okay, now draw accounts of rates accounts, credit, debit. During the year 2019, Tanzania shillings 1,654 received by rents account, and the prepaid is at 31st December 2018, Tanzania shillings 140. And the prepaid is at 31st December 2019, Tanzania shillings 120. Post the above transaction to rates account and the balance transfer to financial statement. The rates paid during the year. This is the amount received by the rates should be recorded on a debit side by saying that cash received, cash 1,654. Prepaid is at 31st December 2018, shillings 140. This is a previous prepaid. In the current year, become a current payment. you record it at a debit side. You say that prepaid BD 140. Prepaid is at 31st December 2019. Tanzania shillings 120. You put on a credit side because this amount have already shown in a cash is a receive, but the service not used in the current year will be used at the next time. Put here 2019 prepaid CD. How much? 120. Then should add a debit side. You got 4971. Always a debit side will be greater than the credit side. Therefore, should be take the debit side amount 1794 less 120. 4 minus 0 you got 4. 9 minus 2 you got 7. 7 minus 1 you got 6. Remain 1, put here 1. 1674. This is the amount transferred to P and L. Okay. In the next year, it means 2020, you put here prepaid CD become a prepaid BD of 120 shillings. Then should be transfer this amount to the P and L. Draw the account known as profit and loss account. P and L means the profit and loss account. You put here and you said that rates on a debit side 1674. Okay, I think you have understood about prepaid and accrued expenses. We continue with our lesson about revenue accrued and revenue prepaid. Example number 3. The financial year of Thomas John ended on 31st December 2019. Post the transactions to the rent receivable account. The balance should be transferred to the necessary part of the financial statement and the balance carried down to 2020. John sublet a part of the premises. He received 1,400. First of all, open the account of rent receivable. Rent receivable. Here is a debit. Here is a credit. John, he received 1,400 during the year ended 31st December 2019. This is a income for John. Should be recorded on credit side as a income. Put here 2,000 9. Cash, Tanzania shillings 1,400 is. Omari, the tenant, owed John Tanzania shillings 175 on 31st December 2018. Remember that this amount Omari owed John. You may say that this is a previously accrued. All previous accrued for revenue account should be recorded on a debit side. You put here 31st. You put here 1st January 2019. Here is a owing BD. How much? 175. Then another owing is Tanzania shillings 185 on 31st December 2018. This is a current year's owing. Should be added by cash. You put on a credit side of account of rent receivable. Put here that owing CD of 185. Okay. Add the credit side. 5, 8, 5, 1. 1,585. And this side you put 1,585. Always for income account, the credit side will be or must be greater than the debit side. Okay. The credit side should be less than the debit side. Here you got 5 minus 5, 0. 8 minus 7, 1. 5 minus 1, 4. Put here 1. You got 1,410. This should be transferred to P and L. It means profit and loss. Okay. In the next year, the owing CD will become that owing BD. You put here that 2020 owing BD 185. Okay. Then transfer the difference to P and L account. Draw here profit and loss account. You put here credit, debit. You said that rent receivable, how much? 1,410. Example number 4. Let us see how to post a transaction on prepaid income. Our warehouse is larger than we need. We rent a part of it to another firm for Tanzania shillings 80,000 per annum. The amount wanted to be paid per quarterly is 20,000 each quarter. Rent due on 31st March 2013, 30th June 2013, 13th September 2013, 31st December 2013. The amount received or cash received: 28th February, you received 20,000. 31st August, we receive 40,000. And 18th November, we receive 40,000. Prepare rent receivable account as at 31st December 2013. Okay, first of all, write a account is known as rent receivable. Credit, debit. After draw the account of rent receivable, post the transactions of rent receivable. At the first quarter, we'll receive the 20,000 on 28th February 2013. Record on a credit side, said that 28th February 2013, cash, how much? 20. 31st August, you receive 40,000. You say that 31st August, receive cash 40,000. And 18th, receive 40,000. 18th November 2018, cash 40,000. Okay. Remember that we rent a part of warehouse to another firm for 80,000. And you receive, when you add the amount, you got 100,000. 100,000. You receive 100,000, and the amount wanted to be received per year is 80,000. The amount wanted to be received per year should be recorded at a debit side, said that P and L 80,000. This is the amount wanted to be received per year, is 80,000. Take 100,000 minus 80,000. You got 20,000. 20,000 is an amount received in now, but the service will receive at the future. Therefore, is known as a prepayment. You say that prepaid CD. and become prepaid BD on 1st January 2014. Prepaid BD 20,000 shillings. Okay. Then should we open the profit and loss account? Profit and loss account. Here is a credit and here is a debit. Then you put here rent receivable 80,000. This is an amount received in the current, wanted to be received in the current year. After that, should we remember that all accrued expenses will be a liability in the balance sheet. And all prepaid expenses will be asset in a balance sheet. And remember that all accrued revenue will be asset in a balance sheet, and all prepaid revenue will be a liability in the balance sheet. Thank you for listening. Please do homework. Thank you. Bye-bye.